Hi, today we are going to learn about fixed assets. A fixed asset is a long-term tangible piece of property or equipment that a firm owns and uses in its operations to generate income. Fixed assets are not expected to be consumed or converted into cash within a year. Fixed assets most commonly appear on the balance sheet as property, plant, and equipment (PP&E). They are also referred to as capital assets. A company's balance sheet statement consists of its assets, liabilities, and shareholders' equity. Assets are divided into current assets and non-current assets, the difference for which lies in their useful lives. Current assets are typically liquid assets which will be converted into cash in less than a year. Non-current assets refer to assets and property owned by a business which are not easily converted to cash. The different categories of non-current assets include fixed assets, intangible assets, long-term investments, and deferred charges. A fixed asset is bought for production or supply of goods or services, for rental to third parties, or for use in the organization. The term fixed translates to the fact that these assets will not be used up or sold within the accounting year. A fixed asset typically has a physical form and is reported on the balance sheet as property, plant, and equipment (PP&E). When a company acquires or disposes of a fixed asset, this is recorded on the cash flow statement under the cash flow from investing activities. The purchase of fixed assets represents a cash outflow to the company, while a sale is a cash inflow. If the value of the asset falls below its net book value, the asset is subject to an impairment write-down. This means that its recorded value on the balance sheet is adjusted downward to reflect that it's overvalued compared to the market value. When a fixed asset has reached the end of its useful life, it is usually disposed of by selling it for a salvage value, which is the estimated value of the asset if it was broken down and sold in parts. In some cases, the asset may become obsolete and may no longer have a market for it, and will, therefore, be disposed of without receiving any payment in return. Either way, the fixed asset is written off the balance sheet as it is no longer in use by the company. Hope you have enjoyed this lesson. Thanks.